Hello, everyone, and welcome to this night's session of TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. Quite an interesting day and volatile day for Salesforce. I'm interested to hear Rob's thoughts on that. We were just talking about a bit about that before the session. Aware that we're not here to listen to me, so after we get through some housekeeping details, I will be out of the way. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, whether it might be a TradeFinder Live or Insiders meeting, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or feel free to take a screenshot if you like, but that's the main point to take away. So for this session, we actually only have one method of asking questions, and that's going to be circled on the screen for you. It's going to be the Q&A window. So at any point throughout the session, please feel encouraged to utilize that method and send in your question. We do have a very brief question portion at the end where Rob will take some questions from Zoom and both YouTube. But again, it is a brief session, so just know if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. With that, if we don't get to your question, definitely take that as encouragement to attend the Insiders meeting when there's a 45-minute session solely based on the Q&A. So much higher of a likelihood of getting your question addressed there if we don't get to it tonight. Lastly, we have the chat window as well. That's for interaction amongst all other attendees, and any support related queries I can handle there. Just be sure to change the bottom from hosts and panelists to everyone. That way, everyone that's attending the webinar is able to see your message. I believe that covers off all the important details. So at this moment in time, I'll introduce Rob Roy.
Hi, everybody, and welcome to this week's TradeFinder Live. Just give you a brief rundown of how this works, and there you can get to see my ugly mug as we go through and talk about the session as well. But we talk about the market outlook, not just the US, but international markets as well. I know we have a lot of international viewers, and welcome to all of you that are live streaming on the various social media outlets. Appreciate your time, and hopefully we'll go through and talk about your favorite markets as well. So not when we get to the general Q&A at the end, as Zach explained, perhaps you can ask us about a market that we haven't covered that you would like to know more about. Then we'll do a bit of a review of some EWO Trade Alerts. And for those of you that are viewing, if you're not going to be around for the entire session, please hang around for the first few minutes of it. Once I go through the US market, and before I go through anything else, I'm going to show you a couple of the trade alerts that have gone out recently for our Elliott Wave Options subscribers, and tell you something that I think is really cool that I think everybody's going to be very interested in. So just kind of a little bit of a teaser there to hang around a little bit after we talk about the US market. We'll look for a current case study consideration after we review the case study considerations that might be considered still open from previous. There's only a handful of them. Most of them would have been closed out, and the vast majority of them closed out for a gain. But we'll see what we can find tonight. If you remember last week, I had you vote, and the vote was kind of a tie. So we'll go through and take a look at what that looks like. So we just went ahead and wrote them both down. So we'll see which one, if either, is doing better than the last. So that's it. That's how TradeFinder works. So let's get to it. Get to the stuff that you really want to hear about. Zach mentioned Salesforce after hours, pretty crazy movements. I think that's kind of the norm with this in-between move that we are, that you expect a lot of earnings reports to be pretty volatile after hour sessions. But we'll take a look at the chart going into it just to see if we could get any sort of an idea of what might or was likely to happen. But taking a look at the US market, you can see we've had this bounce. We've talked about that in the last weekend update. In fact, for the past couple, we were saying that the market was ready to bounce, and it has bounced. Note today, interesting, Doji opened at 413.55, closed at 412.93. So almost a perfect Doji there. So what does that mean? Well, important thing is you can see why we likely have a doji. We've bounced now to the 38 point.
Sorry, Rob, we can't see your screen at the moment.
Oh, every other time I check it.
You're doing good for so long.
This time I didn't check it and it didn't switch. Unbelievable technology, just crazy. I've been doing that for like the last 5 times in a row to double check, and everything was great. Anyway, so here's the chart of the U.S. market. Thanks for letting me know, Zach. And you can see there's that wave 4 right at the 38.2% fib level. So that's where the bounce is. And then there's the doji on the chart, meaning that, all right, indecision. I've talked about this numerous times. I want to be very clear. I am not a candlestick charting expert. I have a very general knowledge of some of the more basic candlestick patterns, but I would not consider myself to be an expert. But I do know that dojis are sometimes confused with meaning a change in direction. And that's not what a doji means. A doji means indecision. Oftentimes the market will reverse, but that's not what the doji means. And then other times it sprints back that direction. It means simply what I said, indecision. So does it make sense that we have some indecision here? The high is getting awfully close to that 420 level, 416.46. We've talked about that's where we're going to find out what really happens. I've given you my viewpoint for whatever that's worth, that I think getting all the major averages to move above their resistance levels, 420 being the resistance level on the SPY, would start to ring the all clear for people, and all the financial networks would be picking up on that. The selling's over. Is the bottom in? Looks like the bottom's in. All the major averages are back above major resistance areas. It should be all clear. And then that's the point where we would have to be cautious about the potential for a rollover. And in this case, going down to hit that new wave 5 low that you can see has that targeted price. That's what that box means. It's time and price projection from this software called Profit Source. If you're not familiar with it, I think it's the best Elliott Wave software out there. Go check them out at hubb.com. But there's and by the way, it's programmed directly from Ralph Nelson Elliott's algorithm, the one that he wrote, not somebody's personal adaptation. So there's the forecast. So somewhere below 360 would be likely if we do roll over. And as I said, moving up to that resistance level at 420 is kind of, see, that's what everybody thinks is going to happen, right? Everybody can see that line that I drew you. Everybody knows 420 is a major point of support and resistance. It just seems too clean to me. The market doesn't usually do what everybody thinks it's going to do, right? I mean, most of you are aware of that now. So just to say that we go up to 420 and roll over and head back down, I think that's too clean and easy. Maybe that's exactly what happens. Maybe that doji that we have is we're close enough to 420. We've gotten back above the 10-day moving average. The one thing that hasn't occurred yet is the 10-day moving average has not gotten back to the 50-day, which I do think is going to happen. There's the 10-day, there's the 50-day. It is closing the gap, but usually when you have this big separation, it actually comes back to touch the 50-day moving average, if not cross above it. So I think that a scenario that is worth paying attention to would be the market breaking above 420, everybody ringing the all clear button, everything's good to go, and then that 10-day moving average making it back to the 50-day moving average, that wave 4 moving past the 38.2% level, perhaps getting to 50 or 61.8% correction. And then as everybody just starts to settle in and think the bottom is in, that's again where I think we have to be concerned about a market rollover and heading to the downside. So that's my viewpoint of the market. So far, everything is playing out exactly the way we thought it was going to, but now we're getting close to that 420 level, and that's where we'll find out. Is that it? Does it roll over from that point, or do we break back above it? As I think would be a scenario that more lends itself to everybody thinking that the bottom is in, and then we head back to the downside. There's still a lot of people that are bearish, and as I said, everybody can see the support resistance level. So I think that's something that we have to pay attention to. So I'm going to show you the TNX, the dollar, and then I'm going to show you those things that I mentioned to you, the T's that I gave you. So if you hang around long enough, I think you're going to find it really cool. So there's the TNX, and notice the bounce to the upside today. So I've been talking about this where the market has been rallying, and let's go back and add volume in there. We actually have average volume today. First time in a while that we've had average volume. First time really on the bounce that we've had average volume. Or these two kind of sideways days here, we had average volume, but then on the two big up days, it was below average volume, but then we made it to average today. But it wasn't really an up day today. So you can't really call that a good thing. The fact that the volume picked up as we're nearing resistance and the market didn't finish to the upside, and we've got a doji. None of those are really great for volume, but all that could change tomorrow if we are able to blast above 420 and start to see those all clear signs through all the financial networks. But one of the things I've been talking about is throughout this bounce, money has not been coming out of the bond market. You can see rates have been continuing to go down. And if there is going to be any sort of a sustained bounce, money should move away from bonds back into stocks. It goes back and forth all the time, even if it's just a temporary move to take advantage of the bounce, which would have meant rates should go back up, right? Prices and yields move in opposite directions when it comes to bonds. Prices are going up, yields and rates are going down. So if yields and rates are going down, that means people are buying bonds. And that meant that there's not a lot of money coming out of the bond market, moving into the equity market. Well, did it change today? Is that doji telling us something on the fact that rates did bounce back to the upside today? That's what's really interesting to see, that if rates start moving back to the upside and money moves out, could some of it move into the equities market? Or is it just we were overbought, which we were, granted, on the 10-year, pretty vertical move with very minor pullbacks or corrections. So a decent correction made sense, but noted it only went to the 23 level. That's the 23.6% fib level. And Elliott himself really didn't characterize that as a significant correction. He granted that it was a fib level, and so he recognized that. But in his mind, he really wanted to see a 38.2% correction for it to be truly considered a significant correction. So he acknowledged, that it's still fib level and you got to look at it, but he preferred to see it go to 38.2 to feel better about a corrective move that's done its thing and then ready to reverse and go back to the other direction, at least getting to 38.2, if not 50 or 61.8. So interesting that we did have a bounce up in yields today. Even though that money didn't go into the bond market or into the equities market, but is it setting up? Is it getting ready to go tomorrow? Possibly. So let's take a look at the dollar, and we have an outside day today on the dollar, meaning that the high of the day exceeded the high of yesterday, the low of the day exceeded the low of yesterday, and very similar to how a doji works. When you see an inside or outside day, normally there's a potential for a change of direction. So is that it? Is that all we're going to get on the corrective move out of the dollar? Is the dollar ready to turn and move back to the upside? Could be. And of course, you want to look at the metals when you see movement in the dollar. And look at that short-lived bounce in the GLD with that. It didn't finish there, but with that intraday trading on the dollar that was a bit higher. And then that didn't allow gold to push through 175. So it needed to get through 175 to continue that bid. It didn't do it. And so now we have that concern over, is gold headed back down? And likely all the metals are going to weaken if the dollar resumes its upward move. And so just to go back and look at the dollar one more time, again, kind of right that 23.6% fib level. But look what happened. How many times have you heard me say this, if you watch these videos, that I don't like vertical moves because what goes vertically up, what often comes vertically back down. Look what happened. Right back to the downside. And where did it come back to? Right where the vertical move started, right there. So that was the dollar was in this nice 45-degree angle, then it went vertical, and then that vertical part got retraced. And that happens all the time after time after time that happens. And so that would be a logical place, even though it's just the 23.6% fib level, but that would be a logical place for the dollar to find some support. You could have thought maybe it goes down to 100, and maybe it still does before it turns and moves back to the upside. But in general terms, looking at it right there, that could be a place that holds as well. So somewhere between here and 100 on the dollar, I think, is likely where support lies, which doesn't bode well for the metals moving forward. All right, so that's the introductory part. Obviously, we have more things to look at. We have more markets to look at, but I did want to show you this because I think this is really, really Cool. Those of you that have been watching these know that we have a new AI-based portfolio called Time Strategy, where it takes advantage of stocks that are in a trading range, kind of like Snap. And we'll talk about that when we get to looking at last week, one of the two considerations between MOS and Snap. And it's AI-based. The signals are AI generated. The AI gives us a ranking of the likelihood of it staying in a trading range. So it gave us the missing piece where we already had the impulse strategy, which was directionally based. We had the volatility portfolio for the consolidating triangles, et cetera. One thing we didn't have was something to take advantage of sideways moves. Well, now we do. And the fact that it's AI based, we just finished our two-part series on time strategy mastery, where we went through and talked about it in detail and the strategies that are utilized to capture IV spikes, time decay, et cetera. And it's pretty cool that you have a strategy now where time decay is normally the enemy of one that buys options. But in this case, with the strategies that we utilize, time decay becomes your friend. So if it stays in a range, you generate all that IV crush, and then you get the time decay as well. And it works out great. Now, what we've started doing is trying to take the same AI, and very fortunate enough to have guys that are adept in AI, understand programming, and understand the world of trading. That's a pretty rare combination. And so what we have been working on now is infusing AI into our impulse strategy, which is our directional based strategy. And that's the strategy that's going to generate the highest gains. And so we're in the beta form there. We haven't released that. We haven't gone live with it yet, but we're going through the testing mode. And we did send out 2 alerts that just look so good that we thought, even though it's just in the testing phase, they're so good, we should send these out to our alert subscribers. So what I wanted to share with you, and let me go back and make sure that you can see my screen again now. Nope. Crazy. It's just technology is amazing to me. All right, so here's one that we closed today, and this is on Qualcomm. Now, see, you can see this was in the impulse strategy, but it was also a signal that was generated. Basically, what it does is take my impulse search, general impulse search categories, and then they infuse AI into it. Same thing we did on the time strategy for calendars, et cetera. It hasn't generated a lot of signals yet, so they're still tweaking it to see if maybe they've got things wound a little too tight. But, you know, that's all the stuff that goes on when you're going through the beta phase and testing and all that, where you're tweaking and collecting data and all those things that you do. But take a look at this on Qualcomm, and the entry was on May 26th. And so this was an upward signal. And you can see here that we hadn't quite hit that wave 5 projection yet, but there was divergence in the oscillator. So it was showing you that even as the stock was moving down, the downward move was getting weaker. Well, the AI recognized that and said, hey, we may be due for a bounce before we reach the wave 5 low. And so even though we hadn't hit the top of the tap box, which normally at least that gets hit, if not the actual 5, because it was a signal, we went ahead and sent that out as an alert. And you can see what happened with Qualcomm, the exit there at $720, a 56.5% return in just 5 days. And if you hadn't taken a look at the chart of Qualcomm, let me go back here and make sure you're seeing that. Here it is. And look what's happened since the signal was generated. Look at that. How good is that? How exciting is that, that you have it never made it to the wave 5. The AI says, hey, it's going to bounce first. And it did. Look at those 3 days. Boom, boom, boom. That's how you generate 57% in 5 days, including weekend. So a holiday weekend to boot. So that's pretty darn impressive, I think, with Qualcomm. And now take a look at this. So here's another one. And this was a downside trade. You can make sure you're seeing this. on the XHB, which is the Homebuilders ETF. So this one was sent out on the downside. Look at that gain, 80% in 6 days. And so here was the entry alert. Take a look at the chart, see where the price target is, around 60. And we're at all kind of support here at 65. Normally you would say, oh, let's break that support level before we go ahead and do anything. But the AI says, yeah, it's going to break. And look what happened. Just boom. One little bit of a bounce, and then down we went. And there we go right to, and that's what I was talking about, how normally we will at least hit the top of the tap box as far as the target. So both of those were the only two AI generated signals that we've sent out to our alert subscribers yet, but just because they both had such high scores that we felt like, hey, these are just too good to pass up. So the point is, and what I was trying to say as far as how exciting this is can you imagine when the system comes out of beta and it's ready to go, which isn't going to be very far away. So if you've ever thought about becoming an alert subscriber, there may not be a better chance than now. How exciting is it to be able to infuse AI into directionally based trading through our impulse system in conjunction with Elliott Wave? I think we're putting the best of everything available in the world of technology together to create maybe one of the best directional trading systems that exists in the market. I know that's a big statement, but if you've been reading about AI, even CNBC did a story on it where AI is likely going to be the future of technical trading, technical analysis. We've already got trading systems based on AI, infusing it into other systems. We've used it in our risk management part of the volatility strategy. And so we're already doing it. So it's not like it's coming for us. We're already doing it, and we're just going to continue to move forward and perfect that. So yeah, if you've ever thought of becoming an alert subscriber at EWOtrader.com, now's the time to do it. So I just thought that was just too cool not to share with everybody. Two great signals, 57% on one, 80% on the other one, neither of them longer than 6 days. Can you imagine? I mean, how excited would you have to be about the potential future of that? So, all right, just wanted to share that with you. Maybe you don't get as excited about it as I do. It really excites me. All right, so now let's go back and look at some more of the markets, and then we'll get to looking at past case study from previous TradeFinders, and then we'll see if we can find one tonight. So here we looked at EWC back on 426, and the idea was we were sitting here at this support level, and we had a gap to fill there, and then another gap to fill above 39. And that was the idea. Well, for a while, it closed the first gap. So it looked like, okay, that's half of it. And then, whoa, as the US market sold off, Canada followed. And then now watch where we are now. This is one of the things that I talk about all the time to our alert subscribers is the patience of letting patterns develop. So now we're coming back, and we are at a 61.8% wave 4. So we're going to have to break that. But look how close we are to 39 again. So we've already recovered all the way back to where we were. And now we have a chance to see, can we fill that gap at 39, which was the original plan. So pretty cool there. And then we looked at Reliance Steel. This one was on 5.3 that we looked at this. So let's walk this back to 5.3. And we did send this out as an alert to our subscribers as well. And we've also made an adjustment. You can see it moved down to a 50% corrective move. And then look at this rally that's underway here. And we got overbought. And we came back to the 10-day moving average today. So we went ahead and added to it with the fact the original target was up around 220, and it still is. We're right back to basically where we were before, except for today, a little bit of a pullback today, but we were overbought. So if we go back one day, you can see how overbought we were at the close on Friday. This, the separation from the 10-day moving average and where we were, and then now that's been fixed. So if you're going to make an adjustment, that was the time. So we went ahead and did that. Looking at Westlake, we had identified this one on the 10th, I believe. Looking at my notes. Yeah, the 10th of May. So that would be here. And the expectation was for a move back down towards the previous 4, because the wave 5 only extended 63%. But look how it went right smack. And remember, I said that they hit the bottom line, but often they go right to the 5, which is exactly what happened there. And then the move down, it's kind of holding at that previous wave 3 high. Now we've back and tapped the tap box again. However, we do have a pattern of lower highs. So I think with this one, you hang in there. Eventually, it should work its way back down to the previous 4. So if you're still within that one, I think you keep an eye on that. Then also on the 10th, we looked at HZO and kind of down a little bit, back up. Not a whole lot going on in that, but that's a move that should move from the completed wave 5 back to the wave 4 as well. So a little bit of a bounce up until today, but the expectation would be that it does go ahead and move back up to that previous 4, back above the 10-day moving average. Even today, we traded briefly below it, we closed above it, but you can see we're struggling a little bit with the 50-day moving average. But if we get past that, there's nothing in the way to get there to the previous 4. And then Cigna, we looked at this one the following week on the 17th of May. And so the high there was 271, and we exceeded that high of the wave 5 move. Bit of a pull down today, but a new closing high occurred on Friday. And so that one's just tooling ahead, doing exactly what it's supposed to do. Take a look at the DMI. It looks like it's about to trigger for another big run. You can see how the ADX, it's not there yet though. And so we can't get ahead of it, but it looks like it's trying to break above 20. It's breaking above the negative directional indicator. So if it does that, if it breaks above the negative directional indicator, the separation stays, and the ADX moves above 20, we could be off to the races there on Cigna. All right, so last week, the two we looked at, I gave you a choice between Mosaic and Snap. And I said, you guys vote. And the results of the vote were just about 50-50. So I said, all right, well, let's just write them both down and keep an eye on them and see what happens. So when we take a look at this with Mosaic, you look at it and look at that move today. It's nicely profitable on that move today. But man, it looks like it's got a long way to go, doesn't it? So, I mean, you could have taken a gain today and closed it out, but let's give it a chance and see, because there's so much more room for that to run, especially when at a wave 4, right at a 50% corrective move. And you can see here, we were able to close above the 50-day moving average today. Now, the one thing I don't, well, let's just cover them all, right? Let's just cover everything. Coughing, sneezing, goodness, allergies. So I don't like this little gap here. Wish that wouldn't have happened today. Would have rather seen that just kind of trade lower and go up, because you know how I feel about gaps as well. They're going to get filled, and that's going to get filled at some point too. Highly likely above a 90% chance that gets filled based on the data. And so if it's going to do that, let's just get it over with here soon before we make another run here. But pretty nice move there. And then the other one is Snap, and it was moving to the upside, but then down today. And our AI tells us, this is one that our AI signal came out on the time strategy that says this is likely to stay in a trading range, at least for the near term. But what we talked about last week was for this one to come up, it's going to come up and fill that gap one day, but perhaps you need to have a longer term horizon on this one. So going further out in time was the idea there, that when they drop like this, that's part of the process of the time strategy portfolio, is the fact that it can stay in a range following a big drop, and you get the IV spike. We use puts to take advantage of that. all those things occur from our time strategy portfolio. And we just went through, as I said, a presentation. So for those of you that want to kick the tires, give us a chance as an alert subscriber. You have access to all of our education, and that time strategy preview is out, as well as a time strategy mastery class. So make sure and go through those. All right, so Zach mentioned Salesforce in the beginning, so let's just go ahead and look at that one now before we look for a case study for tonight. That's really it. That's all the ones that might be considered open from previous trade finders. And you can see that there was a bit of a base here, but the wave 5 is only 54%, so that could go lower. There's one of those wave 4s. That one went to 30%. That's kind of an in-between one, right? It's significantly more than the 23.6% level, but not quite to 38.2. In fact, it's almost dead in the middle. So that one's a little more challenging on, are we done? Are we going to start the wave 5, or do we need a more of a bounce on a wave 4? So when that occurs, you just have a little patience and let it come to you. And the entry on the conservative side would have been when it broke below that level there at 190, which gave you plenty of room down to 155. And so, as Zach said, it's been pretty wild after hours. So you can see that there's two scenarios here. Which one's going to play out? Are we going to make a new wave 5 low, extend beyond 54%, at least go to 61.8, if not 100? Or is the wave 5 going to end there? And then because the wave 5 didn't extend past 100%, we're going to start a march back to the upside. But before we can even consider going back to the previous 4, it's got to get above this 190 level right here. So pretty interesting stuff. And thanks for bringing that one up, Zach. All right, so with that, let's take a look and see if we can identify any sort of a case study consideration for this evening, and then we'll open up the Q&A. Nothing on the impulse side, 0 results, which is interesting. Maybe just because it was a down day, but so what does that mean? Well, that's telling you that there isn't anything strong enough in an impulse move back to the upside in the current market. So it's going along with the fact that this is an oversold bounce, at least so far. It hasn't triggered enough technical indicators to show that, hey, this is some sort of an impulse move back to the upside. Not yet. Right now, it's a lower volume corrective move. That's what's going on so far. Things can change, but that's where we are right now. So nothing on the impulse side. Let's see what the corrective side has. And Arch Resources. Well, that may make sense based on what we talked about with the dollar. Nothing's going on with the DMI, so we'll just take that off. We almost made it to the top of the tap box. Didn't quite make it there. Big down day today. That's what you would expect. With the fact that the dollar rebounded a bit. So are we moving back down here to test that previous 4? Really nice wave 4 at 50%. You would have thought that would have gotten us to close to 100% extension, but maybe the dollar is going to change all that. We are at a major point of resistance here. You can see all this. We've got the wave 3 high, the wave 5 barely labeled that new high. We tested it again on the 26th of May, and then now lowering back down again. So you take a look at that and you're thinking, maybe this one isn't going to hit the wave 5. It's going to go back down. If you wonder what this line is, this is called the displaced moving average. It's a 6-day moving average displaced 4 places, which basically means 4 days. So each one of these bars, so if you're looking at a daily chart, so it would be 4 days. So it's a very short-term moving average, 6 days, and then it's offset, if you will, or displaced 4 days into the future, giving you an idea of where's the moving average likely to be down the road, and are we breaking above or below it? That's what a displaced moving average tells you. And you can see we closed below it today, which is a key. So, a little bit of a caution with the fact that we haven't hit the top of the 5 yet. But remember, with Qualcomm, We didn't hit the top of the 5 either before the bounce. Both of those 5s are still likely to get hit, but what occurs in the meantime? Well, can you take advantage of a move in the meantime? Maybe we need to come down and test that 4. But that's what that looks like. And let's see if we can find anything else. Let's take a look at the VIX real quick and see if the VIX is in a position where perhaps we can look at some sort of strangles. We haven't looked at those lately because the VIX has just been too high, which means options are too expensive. Well, there's the VIX marching to the downside there, coming out of that triangle that it's been, and right there. And so we had the downward move. We talked about this over the weekend in the weekend update. And so we had the confirmation to the downside, trade a little higher, but the VIX finished kind of near the low. It does look like the VIX wants to continue to move to the downside. We're almost in an area. If we can get below 25, that brings all of the strangles back into play. And we're getting there, but you don't want to do strangles with a VIX at 35. Options are just too expensive. Even if you get a breakout, and the VIX does one of these numbers here where it goes boom, boom, boom to the downside significantly. Well, even if the stock's breaking out, they're going to take all that extra premium out of the options. And even with the movement of the stock, you're not going to generate any gains. So you want to see that the VIX is going to be below a level where you could put yourself into harm's way that way. All right, so I think that's close enough. Let's see if there's anything that may look decent. There are 107 consolidating stocks, which I find that really, really interesting with what's been going on in the market. Let's see if there's any that are in a bearish wave 3. You don't see those very often where you've got a stock that's consolidating in a downward 5-wave pattern because things usually move so fast to the downside, right? You can understand why. You rarely see that. Boy, the one that jumps out at me there is a Harley Davidson. That's surprising with where oil prices are. Let's see what the chart looks like. With where oil prices are, I may have too many charts open here. Wouldn't you think that Harley Davidson would be doing well? I mean, doesn't it make sense that they're going to be benefiting from the price of oil and that people might consider motorcycles versus cars because they don't cost as much? Or is it just that the EV market has all that covered? Well, there was a pretty nice bounce and it came right back to fill that gap. There you go. There's a gap that got filled right there. So we just talked about gaps get filled. And now it rolled over today, but it kind of rolled over with the market. And that's not really a consolidation pattern. It's just not a strong impulse move to the downside. And so that created the low ADX, which is one of our signals to having a consolidating pattern is you have to have a low ADX. And so even though we had this downward move, it only ticked up a little bit, but from really low levels down around 10, which is very low on the ADX. So that one, I don't like the looks of that one. Go back and see if we can find something else. XYL, it's just sideways. So I don't like that one either. And then CDAY, now another sideways. So that makes a bit more sense that we don't have a lot of consolidation going on with what's occurring in the market. Wouldn't it be interesting if we actually have some that are in a bullish wave 3? That would be really interesting to me right now because you can see if it breaks to the downside, if the market rolls over and heads lower, but if the bounce continues, then perhaps there's more room to the upside to where we could break to the upside. So let's click on the bullish wave 3. This is all the kind of cool stuff you can do with this software. You can mix and match. Oh, that one's a buyout. This gives a good thing. If you ever see a chart like that, that's a buyout, merger, something along those lines where the price gets pegged like that. So there's some sort of merger acquisition news with this, and you can't trade it. You could look at that and say, let's do a calendar spread on that. It's going as sideways as you can get. Yeah, they don't let you do that. I mean, you can put it on, you just can't make any money doing it. They're aware of that. Trading's not that easy. So it would be nice if you could, but it doesn't work that way. All right, so now let's take a look and see if we can just find a plain old triangle. I'll just quickly look through here. Eagle Materials. That could be interesting right now. Is that enough of a move? Is it a really nice ascending triangle pattern? You see that? Where we have the support here at 135, and then we have the higher lows. Let's see if it's in an LA wave pattern. Well, see, there's one that the wave 5 came down. It didn't make it to 100%. It's supposed to go back to the previous 4. Well, it did. So now this is what normally happens. It's in a corrective pattern, which a triangle is a corrective pattern, and it's trying to figure out what it wants to do next. So that's intriguing as far as you could start a new impulse move. The 5 wave is over, so that pattern's over, and we could start a new impulse move from here. So looking at this with a low ADX, let's just see what the options look like here. EXP on the NYSE. And there's plenty of options. And the spreads aren't that bad either. You look at the, you look at the IV though. Where's it trading? $135. So that's not that bad. You don't have to go very far out of the money to have reasonably priced options. So I wish there was August or September. The only thing is that you go from July, which is on the very short end of a breakout pattern, then you go to October, which is longer. But perhaps that makes sense with the volatility, because the options aren't extraordinarily priced to go out that far. They're really not. So yeah, we can look at that one. So that's a consideration. Make a note of that. EXP. I'll look a little bit longer before we make an official choice here for our case study consideration tonight. Home Depot. Gotta look at that, don't we? I know one we can look at that was very successful in the past. Yeah, I like that anyway. Let's go back. I already saw one that I think that would be very interesting. Let's look at JD. You can see the bounce today. A lot of the China stocks had bounces today, NEO, etc. So it would have been nice to have caught that move, but perhaps it comes back and fills the gap tomorrow. Look how low that ADX is, all the way down to 12, which, as you can see, is about as low as it gets. And so that's enticing on a stock that tends to move like this one does. And with all the noise and news around it, you know, perhaps it would have been too expensive to get in beforehand anyway, but I like that one. 65 to 40, that's a 20-point wide. Yeah, that's going to be it. We can keep an eye on EXP too, but the official case study consideration for tonight is going to be, as weird as that is to say, a strangle on JD, just barely giving us an entry with the VIX borderline around 25. All right. So with that, Zach, I'll send it back to you and let's take some questions.
Awesome. Sounds like a plan. Per usual, we've had tons of great questions and comments coming in from both Zoom and YouTube. So we'll get through as many as we can. We'll start out first with David from Zoom. We'd like to look at HYG and FXI.
Well, I can imagine that. Let's do FXI first, because you would have thought that the whole China side, we saw JD, we saw, I told you about NEO. So yeah, you would expect to see a bounce there. Seems like the China government is starting to relax a little bit, not putting so much pressure on their top companies. It was very difficult to understand in the first place. It is in a wave 5 pattern to the downside, so we have to be careful on whether or not this can be a sustained bounce. But there's going to be resistance at the wave 4. We have not labeled a wave 5 yet, so that doesn't mean the wave 4 is over. So this bounce could come all the way up to 61.8% wave 4 and still stay in the same 5-wave belly wave pattern to the downside. Let's take a look at the other indicators. The DMI is trying to set up. It's not anywhere near yet. That ADX is curling up, but it's got to get above 20. This separation has to stay. So once the ADX gets above the negative directional indicator, gets above 20, now we have something to talk about there. We don't have anything to talk about yet. So we'll play that out and see how that works out. But man, if you wanted to take a shot in the dark, you would expect some follow through, wouldn't you? They're coming out of their lockdown and everything else. The Chinese government seems to be backing off of their hard rhetoric a little bit. So I think that one, if you wanted to take a speculative shot at one, you could take a shot at it. Let me just go back here. A more conservative play would be let it get above 34 first. But if you enter now, 34 would be resistance. And so you'd want to keep an eye on that level. And so high yield bonds, which is HYG, so the ETF bounced right up to a 38% level and kind of rolled over a little bit today, which is what you would expect, right, when you hit a major fib level, which is a 38.2% level. So it looks like this wants to continue lower. So this is yields. That's one of those things where it doesn't make a tremendous amount of sense, but you follow the patterns. And so we'll see if money is going to start moving back there. Wow, that's some risk, but that's an interesting chart. Thanks for bringing that one up. I wouldn't have expected it to look like that, but it does, and it's in a great Elliott wave pattern. And is that going to signal that the bounce is over in the U.S. market based on that rollover move today? Or is that just hitting resistance because we're at a major fib level and we also hit some support? That one's a little trickier as far as where we go in the future. If you were able to get above 80 there, then I say that you move to a 50% correction. And so that one likely goes higher for a bit, but it's got to break that level first. And here comes the 10-day moving average, quickly filling that separation between the 10 and the 50 that you're probably tired of hearing me talk about, but it works, it matters, and that's why I share it. All right, moving on.
Very well, thanks for that, Rob. So we'll transition over to YouTube, and Enduro shared thanks for the Friday live show. So that seemed to have been a hit. I enjoyed it myself.
Thanks. Yeah, we were really interested to see how that would go over. So thanks for the comments and the feedback. We appreciate it. You may very well see more of that.
Absolutely. And so Enduro also passed through a couple symbols, both being RTY or IWM. So
all right, so there's the Russell IWM, and we didn't get through too many of the international markets, but I wanted to get to questions, so we'll do it here. You can see that resistance right there at 190, and we talked about that over the weekend, that running up to 190 was going to be resistance. If it could get above it, then that's the level there. So note that everything with this bounce is moving up towards those levels. And as I said in the intro in the beginning, it just seems too easy to me that just everything runs up, hits its head on resistance, and we roll over and go down. Maybe that's exactly what happens, but it just seems like everybody expects that, and the market doesn't usually do what everybody expects. So maybe we have some resistance here. Maybe we fight these levels for a while, and then we break above them. But the market's going to do what the market's going to do, and if it's going to do what everybody thinks, that's what it's going to do. But 190 is the key level there, and if it does roll over, it's going right back to 170. That could be the new trading range, which is one of the things we talked about. Is that going to be the new range, or are we going to get back above 190 and start to threaten the 210? That's the key. So right now, you just have to watch. Can it break 190 over the next trading day or two?
Thanks for that, Rob. So we'll move back over to Zoom. And you already covered Snap, but George asked, what do you think about buying the short June Snap put and let the July run by itself?
Buy it one more time.
About buying the short June put and letting the July run by itself.
Oh, to buy back the short one and let the long one run. Well, I think that depends on whether or not I would totally be in agreement with that if the market begins to roll over. If the bounce continues, I think because Snap basically came down in two massive stages and it got so oversold that Snap could bounce just a little bit more if the market rallies. But if that's it, if we're going to hit 420 and roll over, then yeah, that makes a lot of sense. Buy the short put back and let the long one run. I don't think we make that call tonight, but in the next day or two, that could be the move.
Alrighty, thanks for that, Rob. So we'll go back over to YouTube here, and Michael asked if you could share your analysis on XBY, maybe the Elliott wave count. Thanks.
Sure. XPY.
Sorry, XBI. I think I might have misspoke on that one.
I might have just misheard. XVI, Victor Isaac.
Bravo. XB is in Bravo. I. Yep. There we go.
I'll get it eventually. Biotechs. Okay, got it. Man, just not doing anything. That's kind of surprising. They haven't been able to catch any sort of with this bounce, which again, I think, everybody, not everybody, a lot of people feel like there's, risk involved in the biotech sector, which of course there is, right? But surprising to me that they haven't caught a little bit more of a bounce. They still have this separation from the 10 and the 50-day moving average. So perhaps this could be, and this is pure speculation here, that if that scenario plays out, where we break above resistance on the major averages and then the all clear sign is sounded, everybody, that biotechs catch a bid. That would be another sign that, oh, hey, risk on again, and everything's great, good to go. And then we roll over. So I do think that 10-day moving average is going to catch that 50. It's possible that it just goes sideways long enough that the 50-day moving average comes down to the 10. But as I've mentioned a few times, that's usually not the way the gap between the two gets resolved. It's not usually that the 50-day comes back down or up in the case of an uptrend. It's usually the 10-day that makes the move and goes back to where the 50-day is. Maybe the biotech's just a little bit late to the party. I think you could take a speculative shot at that too and say that when money rotation occurs, I really think this scenario would play out. I really believe that if the SPY moves above 420, the biotechs catch a bid. I feel pretty confident about that, but we haven't done that yet. So, if you want to be a little conservative and wait and see if the U.S. market can get above 420 first.
Thanks for that, Rob. And while we're on XBI, David from Zoom asked if we could look at the weekly chart real quick as well.
Sure. Weekly chart is showing a wave 3 down. There's that same consolidation there, obviously not as long because each bar is a week instead of a day, but you can still see the consolidation, and it does look like it wants to bounce here up towards that wave 4. Let's see what the other indicators say. Yeah, see the ADX is above 40, indicating that the strongest, very careful when talk about the indicators on the ADX. When the ADX gets above 40, like in this case in a downtrend, it's not telling you the downtrend is over. What it is telling you is the strongest part of the downtrend is over. The signal to go the other way is when the ADX would roll over and break back below 40. That's when the technical signal is, okay, now it's over. But often there's a precursor here that when the ADX does move above 40, that's the end of the move. It doesn't mean that, it just works out that way a lot. But there are times when the ADX can go above 40 and whatever the trend is can continue. It just doesn't continue in such a strong manner as it did before. So in other words, if we were to go lower from here, it's likely not going to be a volatile move lower. It'd be more of a creep lower. But there's that separation between the 10 and the 50-day on the weekly. A question was asked on YouTube if it works the same way on the weekly as it does on the daily. And it's not as pronounced. The gaps, the separations aren't usually as pronounced. That's about as wide as it gets on the weekly chart there. So you can see what happened back here last time the 10-day got too far away from it. It came back down. And again, note the 10-day came to the 50, not the other way around. So yeah, I mean, perhaps the biotechs are, just waiting in the wings, and that could be a speculative shot right now, and see if we get some sort of a bounce back to the upside. Pretty interesting. Notice on the daily chart, the ADX is did it break there? Back. See, now you get a little different signal on the daily being a little quicker than the weekly, which you'd expect. Now you're seeing the ADX break below 40, which is telling you the downtrend is over. So yeah, I think it could take a speculative shot there. You don't have much of a stop or much distance before the stop. 65 you'd be out. Yeah, I like that.
Absolutely. And I still have tons of great questions coming in from both Zoom and YouTube, but I know we are getting close to time. So you tell me, as always, however many more.
Let's do one more of each.
One more of each sounds great. Well, we have two questions from both Zoom and YouTube to look at MSTR from Will and Felicia.
And I know where this comes from because they are so big into cryptos. Pretty nice move today to the upside. And what's gone on with cryptos has hurt them. You've probably seen the CEO talking about cryptos all the time. He's a big believer in them. They're heavily invested in them, etc. And so this is what our subscribers know. This is the launchpad effect. When you go through basing like that. So let's go back and see, is that what's going to happen with biotech? Very likely could be that when you got such a sideways consolidation like that, often you get blast off, hence the name launchpad effect. Often you get a blast off move, and we haven't filled this gap yet, which is probably going to happen in the next day or two. Let's look at the 10-day moving average. Still have a ways to go. I think there's more to come in this bounce. I don't know if it's the all clear that it's going high. I mean, it may be a while, if that Bitcoin halving and all that kind of stuff plays out. But I think you could see a move up there towards 320, 330 before this move runs out of gas. That's a pretty decent move from here. So, yeah. See, what did Bitcoin do?
Oh, perfect. You beat me to it. There's a few requests for that as well.
All right. Yeah, I figured there would be. So let's take a look, and you can see that catching a little bit of a bid. There you go again. Not only did this one have kind of the launchpad effect, but we also highlighted that it had not the largest triangle in the world, but a triangle nonetheless. and we're getting the breakout from there. But that wave 4 looms right at 36,000. We talked about that over the weekend, that any sort of a bounce is likely going to have a hard time getting through 36,000. Still a lot of room to go with the 10-day moving average back to the 50. And look where the 50 is, dead in the middle of that wave 4. And look where it is, right at 36,000. So I think there could be a continuation on Bitcoin up to 36,000, but hard to see it moving past that on this move. Be very impressive if it does, but you may get your bounce. And I do think that happens because I think the 10-day is going to come catch that 50. So likely that we bounce to 36 and then we see from there.
Perfect. Thanks, Rob. And so for the last one of this session, we'll go over to Zoom. Peter asked if you could please look at Unilever. Okay. And I believe the symbol for that is actually UL.
Oh, that's right. Good international company to finish off with. Pretty darn nice move there today. So, hey, you know what I'm going to say, though? Man, I don't like those vertical moves. Really nice move, but the big gap, because it is international, you can see it trades as an ADR, American Depository Receipt, which is how international companies trade on the U.S. exchanges through those. So they tend to have more gaps. So you can see there's a lot of gaps there. So you kind of don't put as much weight in the gap of ADRs and international stocks because, you know, it matters what happens in the international markets, and, you know, that opens based on what happens there. So tend to generate a lot of gaps. The key here, though, is we're pretty overbought from the 10-day moving average now. And I wouldn't be surprised to see some sort of a test back down, maybe to 47 from this move. Maybe it gets one more follow-through day before that occurs. However, I think that if we can consolidate here, you can see where it was resistance before, that becomes support. And so if we can come back down and test that level, that could be a great entry for this to continue to move higher. So yeah, pretty interesting. It's just hard to chase that right now. I couldn't do it. It's too much separation from the 10-day moving average. But it's big that it got above the important level of 46, 47 right in there. And if you get any sort of a pullback that stays above that level, stays above that red line, that could be a really good entry to catch a continued move. The DMI probably hasn't time to set up. CCI, yeah, see, you're almost into an extreme point already on the CCI, so we would need to see that. You need to see it calm down a little bit. It's too far away from its 10-day moving average. But if it backs up and holds that support level, a great entry. So thanks, everybody. Sign up same way all the time. Time's our most valuable asset that each and every one of us possess. And we very much appreciate it when you devote some of your valuable time to us. And we try to make that an informative and educational use of your time. Thanks as always.